Hi, it's Adam Hewison. I'm coming to you, as always, from the digital studios of MarketClub. And the market we're looking at is perhaps one of the most frustrating markets I think a lot of traders have ever seen. And certainly I think this is not just for folks that trade from home, but also professional traders as well. So let's take a look at what's going on. And this is how the power of the triangles can really help you determine where you want to be in the marketplace. So if we put our long-term trade triangles on, and that's our monthlies. So we put that on, and you can see based on two things. So you can see, one, we have got a 60 reading, which is right here, a plus 60, which indicates basically a trading range. We have our long-term monthly trade triangle, which is right here, pointing down. We have our weekly trade triangle, which is right here, pointing up. We have a conflict. And what it means right now, officially, the trade triangle technique is neutral on this market. Looking at some of the other lines we have on the screen, we have three moving averages. The longest is the 200-day moving average, which is like a green line, and that's still sort of flat, and prices have not penetrated that on the upside. Very close to it, but not quite. We are at a level of resistance which should provide enough pressure to keep this market under wraps, at least for the moment. Potentially we could be making a head and shoulders bottom, which would lead to a rally. But it would suggest that we are getting close, or we are at some sort of resistance level with the previous highs. Let's take everything off the screen and let's look at the market a little closer and take a look. Okay, we're back, and you can see this is the area I was telling you about, right around here. This is where the resistance is, and also where you've got the 200-day moving average and the 127-day average, which I used here. So they're very close to being there. We've crossed over, obviously, the 50-day moving average, which was here, and the crossover was right here. But we're also beginning to see the MACD, which we talked about in many other videos, start to roll over. It hasn't completed yet, but if we see this market go below the red line, that's a good indication you're going to see some sort of pullback, which may take us to this level here to start a symmetrical head and shoulders bottom. Now, if that's true, we'll certainly bring that to your attention. But for the most part, we're at resistance. Maybe all the news has come out. I don't know. The good news, I should say, and maybe some of the bad news is going to start to filter through and affect this market on the downside. But again, when you get a 60 reading, whether it's negative 60 or plus 60, it tends to indicate a trading range. And that's what I think we have right now, and that's a trading range. So keep your powder dry. There's going to be lots of opportunities for the months of August, September, October. Lots of opportunities. So thanks for stopping by. We'll see you soon.